Hey all, welcome to ShareTreck. This is Raj here, friends. Good morning. And I want to say that yesterday I got caught. I had a little bit of exposure to FNGD. I went out to buy groceries, and when I came back, everything was out of control. So I got around $8,000 in accrued losses sitting out there, which I'm hoping I'll be able to bail out of. So the lesson basically is that the market is very dynamic and we can't afford to move away from the screen, especially if you have 3x leveraged funds. I mean, in hindsight, it looks like, it's a no-brainer. But at that point of time, I thought other things were more important. So another valuable lesson learned from the market. So I've got just a few points to make before we proceed ahead. The fear and greed index is much improved. It's gone to 16 now. So it's still in the fear stage, extreme fear stage, but we are still a little bit better. And there is a double bottom that I have seen in the indices. We'll talk about that when we go into the TradingView platform. The question is, will it lead to a bounce back, and will the bounce back be sustained? We'll check that out. And then I'm thinking that the spike in prices that we had yesterday was not natural, and we are in an unpredictable environment, possibly not a level playing field, because some people probably took benefit of this knowing ahead of schedule. And also the tweet from President Trump saying that time to buy DJT, that I think if anybody else, any other company executive had done that for their company, they would be in serious trouble with the SEC. So I think we have to be extremely careful as retail investors in this market, because possibly it's not a level playing field. And I think we are still not out of the woods, because the market has given out a sigh of relief because all that huge tariffs have been taken off for now, but still you have the 10% tariff, and also the 90-day of uncertainty remains, because 90-day down the line we are back to the same situation. And of course, don't forget, China is still having the tiff with US. That has not been resolved. European Union is playing it in a very mature manner. They have also deferred their tariffs to 90 days, waiting to see what happens, and they have offered 0 to 0 tariffs. We'll see how it goes, because if we were still to believe what happens in terms of in case of Vietnam, the government had stated that even though Vietnam offered 0 tariffs, there are a lot of non-tariff barriers. And when it comes to non-tariff barriers, Europe has got a lot of those from the American point of view, because they are very particular about monitoring social media. They are particular about food, what kind of food comes in and all that stuff. US would like all those regulations to be diluted, and I don't think EU is planning to do that. So we should keep all those things also in mind. So we are not yet out of the woods. We have to be careful, and there can be wild swings up and down. That's the way I'm looking at it. And I want to show you a chart. This is the chart that I wanted to show you. This is one of the explanations for yesterday's decision by President Trump. The bond yields were going up, which basically meant that the bonds that the US would sell, they wanted to sell bonds at 1 o'clock, they would have sold at a much cheaper price, and therefore the money netted would be less. And it was very important to resolve that. And there are two theories making the waves. One is that big countries have stopped buying US Treasury bonds, and in fact they are selling, and that's why the bond yields have gone up and the bond prices have gone down. So that's one theory. The second theory is that a bunch of hedge funds got stuck in what is called as a basis trade. In basis trade, they are basically trying to look at you. If you see this chart here, you got this blue line, that is a spot cash, which means that this is the price at which you can buy the treasury. And you can see that at the bottom, the days to expiry of the futures is moving towards the origin, 30 days in the right side and 0 on the left, 0 to close. So if you look at this chart, right, it explains the ongoing sell-off, because the green dashed line represents what future prices would do in a normal market, gradually converging with the spot price. The red dashed line shows what actually happened. So the blue line is what it should have been. So it's very low. It's at 98% or something, whereas the red line is already at 101. So the red dashed line shows actually what happened. Future prices stayed elevated, causing the basis to widen. This becomes negative basis, and this divergence is what led to losses, resulting in margin calls for hedge funds and the forced liquidations that we are seeing now. So this is the second theory. I don't know which theory is right, but we have another inflection point today. Core inflation rate is going to come out. Again, this is a backward looking indicator. This is a lagging indicator. It's not forward looking, but that can confirm any kind of biases for the market, for the bond market especially. So we have to be careful what happens. The morning trade, pre-market trade may not exactly reveal what's likely to happen once the market opens and what's likely to happen after 8:30. We're also going to have initial jobless claim, continuing jobless claims, all those data coming up. That's going to make the Fed think one way or the other in terms of how strong and resilient the economy is, and whether they should focus on unemployment, in which case they're going to reduce interest rates, or they're going to focus on inflation, in which case they have to increase the interest rates. So that conundrum for the Fed still exists, and this is what is going to help them resolve. Now let's go on directly to the futures. Now this is the stock futures. Now if we go into 30-minute time frame, this is where you see the double bottom out here, and if you zoom out further, you could see another double bottom. So let us take the bigger double bottom out here, and if we go into NASDAQ, I've already plotted the lines for the double bottom. TradingView kind of warps it out a little bit. So this is around 20,449. So I'm going to take us back into our 1-day time frame so that we can see this line properly in the larger context. So here we are. We ended exactly matching where we were at the last inflection point from where we came down and touched the bottom. We got pushed up by this support, and this is potentially where we can go today, and maybe we can go even further higher than that. It all depends on what kind of catalyst the markets get. But pre-market we are down 1.94% on NASDAQ, and pre-market we are down 1.63% on S&P 500. So because I don't know what's going to happen, I'm not going to make any guesses. I'm going to watch and react to what happens in the market. And when we go into the stocks, I'm going to talk about potential resistance and support. And let's go on to dollar index. Dollar index is as weak as it has been for a while, 101.939. That is pretty low. And if you look at the 10-year yields, 10-year yields had spiked and they have come down, and they are traveling further down today. This is a relief for the Feds and also for the White House. And this also gives us a little bit of comfort that yesterday's peak panic is not in the market yet. And let's go back and have a look at S&P 500 where we ended it, and try to see if we can find any support and resistances. So for us today, if we take yesterday's close, I think our resistance is going to be 5,508, and the next resistance is this dynamic line, which is at 5,571.71, and our support is going to be 5,394.64. This is the range I would say for S&P 500. For NASDAQ, our range is going to be, because we ended up out here at around 19,145.09. I would say that our first resistance is going to be 19,463.89, and the next resistance is going to be 19,500. So combined, they are going to be a strong resistance for us. And our first support is going to be this dynamic line of support, which is not visible in small devices. So I'm going to make it a bit thicker, and it's sitting at 19,076.89. I'm pretty sure that we could break through that, and we could probably test the support at 18,598. I'm going to mark this green, and if we fail that, we will go to 18,523. I'm going to mark this also green, because we have broken through a whole lot of supports and broken through a lot of resistance and converted them into a support. I'm just going to mark them all green so that we can see it here. And the lines of resistance probably are not visible in your smaller device, so I'm going to mark them slightly thicker so that you can see where they are. And just please bear with me so that you can see it clearly. So there is a whole bunch of lines of resistance out here that we have to clear through. And if we go into QQQ and have a look at where QQQ ended, QQQ ended at 466 and right now it's at 456. Not much of a difference. It is between these two lines out here. So first let me mark the supports based on the resistances that we broke yesterday, and that will give us a clear idea of where the supports lie. So for us today, the resistance is at 468.07 and our first support is at 450.88. Second support is at 437.73. So that's the range for today, and I'm going to mark this pixel a little bit thicker for this line. So this is going to be our resistance, next resistance out here. In case we break out from this resistance at 468.51, we are going to see resistance at 489.11, which is going to be a strong resistance because it's also in close proximity to another horizontal line of resistance out here at 491.41. So that's what we have for QQQ. VIX is again picking up today. It opened up above where we closed yesterday, and it has got some resistance out here. I would put a resistance at 40.03. If we break above that, then things could become a little bit ugly. Put call ratio is almost neutral, and gold is up again 1.25%, and it's breaking through this long time line of resistance. Now it could go all the way up to 3142.77. 3142.77. Yeah, so it could go all the way up there, and then probably it could come down. I don't know how gold is going to behave because right now I am suffering from some kind of a whiplash from yesterday's action. I want to see how the market settles down. So I don't have any gold holdings at this point of time. I just have PSLV, which I would like to unload when the opportunity comes. I'm going to look at XLP and see if we get any clues out here. XLP has clearly broken away from this reverse head and shoulders. It's quite bullish out here. We'll see what happens when the market opens. Now let's go on directly to AI and look at stock specific action. The biggest stocks that we have to look for is NVIDIA. NVIDIA is the prime mover for S&P 500 as well as NASDAQ in my opinion. NVIDIA is down 2.93% in pre-market trades. Of course, many of people who took the message from President Trump and decided to buy, they made out like gangbusters. They have got a lot of money, they got a lot of profits, and they are still looking at this 10-day tariff uncertainty, 10% tariff uncertainty for 90 days. And they are thinking, okay, we have a lot of profits, let us book the profits. Some of them may sell everything and take the profits. Some of them may sell half of the positions and take profits. Some may end up selling calls to take as insurance. They may do a whole lot of different things, and we don't know how the combination is going to work out. We are seeing a little bit of negative in the pre-market session. That could be a hint of a bit of profit taking. First, let me mark the supports. So quickly, just bear with me. I'm going to quickly mark the support so that we can see clearly what's happening out here. These are all the supports, the resistance that we broke out of and created as supports. And we also had this entire box of resistance, which has now become a box of support. So I'm going to put this out here. And our price action right now in pre-market session is somewhere out here at 110.94. It is a thin orange line which is not visible on your smaller devices. So I would say that our resistance today is going to be somewhere around this thick line out here, thick red line. I'm just going to mark them as a little thicker line out here so you can see it. It's going to be at around 124.70. That's our first resistance. And then we have got a long-term diagonal line which is traveling downwards, and that's also going to be a line of resistance for us, and that is sitting at 126.86. So these are the two levels of resistance for us. Our support is going to start at 109.42 all the way down to 106.89, and if we break 106.89, then 105.83 is our next support. So that's a whole lot of support available for NVIDIA. NVIDIA is looking pretty good. I'm just going to go in and look at NVIDIA on the 30-minute time frame to see whether there's a double bottom that we can see out there. No, we cannot see a double bottom out here, but I do see a cup and handle pattern, and I think we probably met the target for this cup and handle. Let us see where the target is going to be. I just copy this or clone this, change the color so that we can see clearly, put it out here. So I'm thinking that NVIDIA has a potential of going all the way up to 128.60 today. It may as well do that. Pre-market, it doesn't look like that, but I think there is a potential for it to do that. In the process, it could make a whole bunch of resistances. So keep that in mind. And if NVIDIA breaks these levels and goes up, I think S&P 500 will also go up and meet the potential of the double bottom. We have Meta next, and I'm going to just go back into the 1 day time frame and look for Meta out there. Again, if NVIDIA goes up, it's going to take all the Mag 7 with it. And at this point of time, we ended NVIDIA at 585.77 yesterday, and pre-market we are at 575.51. So this is our resistance out here for today, 581.97. And our support is going to be 549.77. And if that fails, then our next support is going to be 516.18, and we are also going to get a very strong support from this diagonal line of support out here, which has been coming from a long time for us. It's a dynamic line of support. It is going to be at 520.15. So this is the range of support for Meta. Momentum has picked up. MACD is also improving out there. If you look at Google, it's down 1.40% in pre-market trade, but yesterday it had gained 9.88. Friends, I'm really happy because my dollar cost average long-term positions are looking good, and there are lots of profits to be taken, especially for Amazon and Meta, where I just have 100 shares each. But I'm not going to take those profits today because they are my dollar cost averaging position for build-up. So I'm going to wait for them to work out. And I'm thinking that for this year, I'll have smaller holdings on all the Mag 7 stocks, and also on other stocks I'm looking like BRK and all, so that I can have broad-based support for my share and risk diversification, because if I put all my eggs in one basket, it's going to be a problem. So that's the reason why I'm not going to sell these ones, because they're just 100 shares. But let's come back to Google. For Google, I'm going to just thicken all these lines of resistance so they can be visible to you in your smaller devices. These lines are already in my chart, but you're not able to see them because they're all 1 pixel kind of lines. So there's a whole lot of reds out there which are resistance for us for Google, and the support for Google today is going to be 154.92, and then our next support for Google, if that fails, is 152.29. I'm just going to mark the next support out here. And then our resistance for today, the first resistance is going to be 163.19, and the second resistance is 164.54. That's the range in which I expect Google to move. Amazon is down 2.34% in pre-market trading, but Amazon has got a lot of support at the bottom out here. The first support for today for Amazon is going to be at around this level, which is 184.24, and the resistance is going to be 191.82, and there's a dynamic line of resistance which suggests a resistance of 193.31, which is the next level of resistance that we can see. After that, we have another resistance out here which potentially can be tagged today if can be broken and converted into a support. That's at 195.50. All these range of possibilities exist for Amazon. And then we have Apple, which is down 3.15% this morning in pre-market trades, and it's sitting at 192.38. So 192.38 is somewhere just below this line of resistance that we have here. So I'm going to leave this undisturbed as a resistance for this morning. I'm going to convert 181.95 into our first line of support, and I'm going to convert 171.81 into our second line of support for today. And our first line of resistance today is going to be 192.19, and the second line of resistance for us today is going to be 207.06. 1.62. This is the range in which I expect Apple to move. Then we also have Microsoft out here, and let's look at Microsoft and see what we can glean out of the charts out here. I'm going to thicken this line of support from before, which has been converted into a resistance in pre-market trades. We are at 385.04 right now, which is between these two lines out here. So I'm going to convert this into a resistance for the morning, and our support is going to be out here, which is at 380.37, which is our first line of support, and our first line of resistance is 387.02. So this is the range in which I expect Microsoft to function today. And Tesla is down 3.23% this morning in pre-market trades, and it has got resistance on the top at 268.45 and at 265.11, and it has got a support at 255.72, which is the first support. The second support is 250.21, and the third support is going to be 241.74, and the ultimate support for today is 233.05. So these are all the supports that are available for Tesla, and this is the range in which Tesla is going to move. Tesla is looking very strong on the chart, so I'm thinking that it's going to break through all this resistance and convert them into a support, and we should be looking for new supports going forward. Oracle is down 2.51% in pre-market trade. The resistance for Oracle is 142.73. Right now it's at 136.19, and 135.76 is the first line of support for Oracle, and the second line of support for Oracle is 128.01, which you can see here in green, and then we have 125.96, which is the next level of support that we can expect for Oracle. AMD is a part of the Mag 7, so I'm going to look at AMD. It's down 3.50%. Resistance for AMD today is 95.94, and I'm just going to pull this line of resistance from the past a little bit forward, and this is going to be the line of support today for AMD, and that line of support is at 92.75. If that fails, we have another dynamic line of support which suggests a support at 84.23, failing which we have support at 81.45. So with AMD, I think these are the range of possibilities that are existing today. SMCI was up 15.77 yesterday, and in the process it converted a resistance into support at around 34.68, which continues to be a support for today. Pre-market trade is at 35.39, and our resistance today is going to be 42.80. Broadcom was up 18.60% yesterday, and today it's down 4.06%, and it's sitting at 176.63, and therefore our first support is going to be 170.21, and we have a resistance out here which is not visible in your screens, so I've increased the pixel thickness out there. So our first resistance is 178.53. Following it, the next resistance is 186.39. We have one more resistance which I'm going to make it thick out there to show for you. So if we manage to get the strength again, because MACD is bullish, momentum is above average, I'm thinking that we could consider all these resistance to be potential targets for converting to support for AVGO today. Palantir is also looking strong, but the MACD is still not bullish, but I think that Palantir could bounce back. Palantir is at 88.77, so the first level of support for it is going to be 83.68, and the resistance is going to be 101.40. Nothing else is there in between, in my opinion. SMH, the semiconductor ETF, is up 17.16% as of yesterday. Pre-market, it's down 3.48%. It's sitting at 203.50. So all of the supports, all of the resistance from the past are support for it, with the first support being here at 201.22. And then we have another range of support out here, which I'm going to mark into green, which is sitting at 197.71 to around 196.41. And after that, we have some support here at 185.35. I don't expect us to come and tag this support so low, but I'm just marking these off for housekeeping so that in future we don't see red lines where support should be there. So it's all done now. So this is the range for today. And then I'm going to go off to look at Tempus for hot dog. So Tempus is down 2.90%, and our support of 42.90 is going to be the first resistance for us today, and the second resistance for us today for Tempus is going to be 48.07, and the support for Tempus is going to be at 35.98. So this is the range for Tempus. So that kind of completes my review for this morning. And I think that that brings me to an end of today's session. Unless there's any questions from anybody, I'm just going to go ahead and go for my breakfast. I didn't do my genomics yesterday because, as I said, I was in a state of shock looking at the jump in the prices and my short position being slaughtered. But today I'm on a recovery path. I didn't do any rash action. I didn't sell anything. I'm waiting today to see what happens when the market opens. I'm going to react, and I'm not going to try to game the system. Okay, friends, thanks a lot, and I wish you a very nice day in the markets, and I'll catch up with you again in the next session. Bye for now.